Why experienced investors prefer referrals over hype? What is it that separates experienced investors from beginners is not just capital, but decision making. Social media, online ads, and viral content constantly push the next big investment trend. In today's world, opportunities are everywhere. Why shipping containers have become such an important part of the global economy. Every year, billions of dollars worth of goods move through international supply chains. Whether it's consumer products, industrial equipment, construction materials, or retail inventory. But experienced investors rarely rely on hype. Instead, they rely on relationships, referrals, and real operational visibility. Because in investing, attention is easy to get, but trust is earned over time. And that is where the real difference begins. Hype-driven investing is emotional investing. It is driven by excitement, urgency, and fear of missing out. When people see others talking about high returns or fast growth, they often enter without fully understanding the business behind it. But experienced investors think differently. They don't ask, how popular is this? They ask, how does this generate revenue? How is the real business model? Is this backed by real assets or just speculation? Because hype can grow fast, but it can disappear even faster. Relationship-based investing. Large-scale investors do not invest in numbers alone. They invest in people, systems, and execution. They look for operational consistency, transparent management, real demand in the market, and strong execution history. Because even a strong idea can fail without proper execution. This is why relationships matter. And when it does, investors who entered based on emotion are often the ones who carry the risk. This is why referrals matter so much in the investment world. A referral is not just information, it is filtered trust. When an opportunity comes through a trusted source, it already carries a level of credibility that marketing alone cannot provide. Experienced investors value this because it allows them to ask deeper questions, understand real operations, evaluate the people behind the business, and verify how returns are actually generated. In many cases, the best opportunities are not found publicly. They are introduced privately through networks built over time. In investing, there are two paths. One is driven by hype, the other is driven by relationships, referrals, and real assets. Experienced investors consistently choose the second path because hype creates attention, but trust creates opportunity. An opportunity built on real demand and real assets is what creates long-term investment thinking. This is why due diligence is essential. Experienced investors do not rely on numbers alone. They study the structure behind the numbers. They look at how revenue is generated, how assets are deployed, and how demand is sustained in real-world conditions. What makes containers unique is their versatility. A single container can be used for transportation, storage, warehousing, support, construction projects, and even temporary business facilities. This flexibility allows containers to serve multiple industries, creating a broad range of commercial application. At KM Trading and Shipping Logistics LLC, our focus is on building a transparent, asset-backed leasing structure grounded in real economic activity. Before investing, experienced investors always perform due diligence. They evaluate revenue sources, asset ownership, operational structure, market demand, management team, risk exposure, and financial transparency. They do not rush decisions. They verify, analyze, and confirm before committing capital, because protecting capital is just as important as growing it. As global commerce continues to grow,
Businesses require reliable infrastructure to support their operations. And in the case of shipping containers, that industry is deeply connected to global trade, logistics, and the movement of goods that businesses rely on every single day.
When investors understand who is running the business and how decisions are made, they can evaluate opportunities with more clarity and confidence.
These advancements help improve operational visibility and support better decision making throughout the logistics process. Shipping containers have become one of the most widely used pieces of equipment within the logistics sector because they offer durability, security, and operational efficiency. Many businesses prefer leasing rather than purchasing equipment outright. Leasing allows companies to access the assets they need while preserving capital for other areas of their business.
Another key principle experienced investors follow is this: real wealth is built on real assets, not trends, not speculation. Assets that serve actual demand in the economy tend to create more stable long-term value. One of the strongest examples of this is global logistics infrastructure, specifically shipping containers. Shipping containers are essential to global trade, transportation, and storage. Without them, modern commerce would not function at its current scale. They're not theoretical assets. They are physical, operational tools used daily across industries.
This creates an ongoing demand for container leasing services across various industries. Another factor that makes the industry interesting is the scale of global logistics. Every day, ports, warehouses, distribution centers, and transportation companies depend on containerized systems to keep products moving from one location to another.
Now let's bring this into a real-world structure. KM Trading and Shipping Logistics LLC is a container leasing company headquartered in Sheridan, Wyoming. Our operations focus on one clear model: connecting physical container assets to real-world business demand. We have our containers manufactured in Texas, United States of America, ensuring they meet operational standards required for industrial and commercial use.
When supply chains operate efficiently, businesses can serve customers more effectively and maintain inventory levels with greater consistency. Allow operators to monitor container usage more efficiently than ever before.
These containers are then leased to clients who require reliable storage and logistics solutions across different industries. Our model is straightforward. Performance depends on multiple factors, including occupancy rates, lease pricing, operating costs, and market conditions. Because of this, actual results may vary, and capital is always at risk.
Of course, like any business sector, the container industry faces challenges. Market demand can fluctuate, operating costs can change, economic conditions can affect leasing activity. This is why experienced investors spend time understanding industry fundamentals rather than focusing only on projected returns.
Instead of focusing on complex trading or speculative mechanisms, we operate on a real asset leasing structure. Clients pay fixed monthly rental fees for container usage. Investors may receive back less than they invest depending on market performance and operational factors, creating consistent operational demand for the assets. Through the system, investors participate in the container leasing ecosystem where returns are generated from real rental activity and asset utilization. It is important to understand that any returns presented in our materials are target figures, not guaranteed returns. If you want to understand how asset-backed container leasing works and how it connects to real-world logistics demand, then the next step is simple. Focus on learning, understanding, and verifying, not rushing decisions. Because in investing, clarity always wins over excitement. Thank you for watching.